Hello everyone. Today we're going to talk about Chapter 5, Module 5, Homework Assignment number 5. You're responsible to work on the homework assignment from 5-1A through 5-14B. I'll do the 5-4A and 5-14A for you guys. Let's work on the 5-4A first. Let's read the question. Due to its experience rating, Top Inc. is required to pay unemployment taxes on its payroll as follows. Under the state unemployment for Massachusetts, on taxable payroll of $18,000, the contribution rate is 4%. So number A, state unemployment tax paid to Massachusetts, $18,000, 4% equal to $720. So you take the F10 times the H10, okay? B, state unemployment tax paid to New Hampshire. Under the state unemployment tax for New Hampshire on taxable payroll of $24,000, the contribution rate is 2.65%. So we'll enter on F12, enter 24,000. The tax rate is 2.65%. So conversion to the decimal point is 0.0265. And the tax is equal to F12 times H12. So it is $636. The Maine, under the state unemployment for Maine on taxable payroll of $79,000, the contribution rate is 2.9%. So Maine is, let's go up a little bit, 79,000. 2.9% is 0.029 and equal F14 times H14. So it's $2,291. Federal unemployment tax filter is federal unemployment tax. The taxable payroll is $103,500. So $103,500. The rate is what? Rate is 0.6%. Always, okay? Filter is 0.6%. So conversion to decimal 0.006. And the tax is F16 times H16. $621 for the filter. We finished 5-4A. Let's go to 5-14. Let's read the question for 5-14A. Marlene Grady and Pauline Morrow are partners engaged in operating the G&M door shop, which has employed the following persons since the beginning of the year. Hoffman, 1,700. Drungen, 1,500 per year. This is per year. 15,000 per year. Beta, $180 per week. Egan, $220 per week. Lynn, $160 per week. Glady and Moran each pay a weekly salary allowance of $950. The door shop is located in a state that requires an employment compensation contribution of employers of one or more individuals. The company is subject to the state contributions at a rate of 3.1% for wages not in excess of $8,100. Compute each of the following amounts based upon the 41st weekly payroll period for the week ending October 10, 2014. So we go to do the 5-14A. Grady. Remember Grady and the first two are partners, okay? Grady and Moran are partners, so they're not subject to the OASDI and HI, okay? So let's only do the Hoffman through Lin here. Hoffman get a monthly payment, monthly salary. So her monthly is equal 1,700 times 12 months in a year divided by 52 weeks in a year. We need to convert it into weekly payment. And Drungan gets yearly pay for 15,000 divided by 52 weeks in a year. So you see the asterisk. I don't know why, because supposedly it is 15,000 divided by 52 weeks. So they give me the they not give me decimal point. They're giving me the not the decimal point. So it's 200. Let's do the conversion. $288.48. Okay. So see, they still give me this. It's 200 in here. $288.46. And Beta gets $180 per week. So we just enter $180 per week. And Agon getting $220 per week. Lynn gets $160 per week. Okay. So on the OASDI equal G12 times 0.062. And you can do the dragging down the formula here. So let's drag down the formula. Much more easier. And this one equal G12 times 0.0145, 1.45%. And you can drag down the formula. Okay. Okay. So let's do the employer OASDI. Employer OASDI is the same as the employees, because employees paying this much, employer are supposed to pay this much too. So OASDI in a all the OASDI taxes is 12.4%. Remember, employee pays 6.2%, employer pays 6.2%. So altogether is 12.4%. The Medicare is 1.45, but then altogether employer and employee altogether is 2.9%. Okay. So taxable earning is all this together. So G equal to sum of G12 adding G16 all together. Okay. So $1,240.77 times the rate is what? 0.062. Remember what I just told you is 0.062, 6.2%. So equal, hold on, wrong space. Equal G22 times I22. Next one is employer Medicare taxes. So equal G22. Medicare is 0.0145%. Equal G24 times I24. Okay. Let's go down. Now we come to this is a little bit complicated in here. Taxable earnings subject to the state unemployment tax. The state unemployment tax is set in here. Okay, the company is subject to state contribution. This is unemployment, state unemployment contribution at a rate of 3.1% for wages not in excess of 8,100. Not in excess, so not greater than 8,100. If the employees, wages are not greater than 8,100, then the state, the company has to contribute 3.1% on that employee. Okay, so let's calculate their payroll in here. Hoffman, let's do Hoffman. Hoffman weekly is $392.31 times 41. This is their 41st payroll, okay? Based on the 41st weekly payroll. So we have to times the 41 payment. So Hoffman already gotten what? 16,000 is more than the 8,100 because we have to compute not in excess of 8,100. Okay, then they will need to contribute, the company will need to contribute to the state for 3.1%. So on this one is already exceeding 8,100. Drunken, $288.46, okay, in here, times the 41 payment is $11,827 already. It's in excess of 8,100. Beta, $180 times the 41 payment is $7,380. So beta is less than 8,100. Okay, let's put beta in here. G beta. Okay, her taxable rate is $180. Okay, that we have another person too. So Agan is 220 times 41 payment is $9,020 is in excess of 8,000. So the company does not need to contribute on Agan. Lynn, $160 times 41 payment, $6,560. So less than 8,100. So Lynn is the second one that the company needs to contribute on Lynn. So Lynn is $160, and then altogether is SUM sum G28 G29. So $340 times the rate is what? The rate is 3.1% in here, 3.1%, okay? So the rate is 0.031 equal G30 times I30, $10.54. Total earning on the filter. Filter is the federal unemployment tax, okay? So federal unemployment tax is 0.6%. It's 0.6% on the first 7,000 only. On the first 7,000. So go back to here to take a look. Which one is less than 7,000? Only Lynn is less than 7,000. The other are more than 7,000, okay? This one, beta, is more than 7,000. So we only contribute, the company only need to contribute to the first employee less than 7,000, okay? So Lynn is the one getting $6,560. So Lynn is, so B, L-I-N, Lynn. Taxable earning B Lynn. So B Lynn. And taxable wages is $160 times the 0.0